Hey, good evening, ladies and gentlemen. And once again, welcome to the Consumer Protection for Digital Financial Services technical webinar, which is now going to begin. From the outset, we would like to congratulate both the CEMCWG working group and the Digital Financial Services working group for the successful management meeting that has just concluded, and also to congratulate the various leadership teams that have been appointed into the respective working groups. I am sure that it's going to be a very exciting year for the new leadership team, and also congratulations for the great strides and great work undertaken by the outgoing leadership team. Of course, your guidance and your leadership in driving the two respective working groups is very much appreciated from the management unit. So without further ado, let me move on to the next slide, Sulita. So there is no need to introduce myself. Everyone is aware who I am, and I hope that in the near future we would be meeting physically, so that we touch base again on the human aspect of getting to meet each other. I know that everyone is looking forward to when the next physical meeting of the DFS working group and the CEMCWG working group will take place. But for now, virtual still kind of contributes, because we can still see each other via the video. So for today's agenda, very quickly running you through, we will be welcoming the Deputy Executive Director for AFI, Mr. Norbert Mumba, who would be delivering the opening remarks, followed by Mr. Stephen Ambori, who will theme set and also call to action the consumer protection for DFS, and our panel discussion, which will be moderated by our very own policy specialist for e-money, Ms. Adetswa Otto, and then our esteemed panelists of speakers, Ms. Elizabeth Guerrero, Mr. Stephen Ambori again, and Mr. Rafe Mazer from IPA. More introduction on the same will be provided by our moderator, Ms. Adetswa, and then which will be followed by a Q&A, highlighting to you the support that AFI can provide for implementation. We will also have a poll, and then we will close. So on that note, ladies and gentlemen, I now welcome our Deputy Executive Director for AFI, Mr. Norbert Mumba, to deliver the opening remarks. Mr. Mumba, please.
Thank you very much, Aliki and colleagues from AFI. And good evening, ladies and gentlemen. Let me, since I spied into your other sessions just a short while ago, let me also join the team in thanking most sincerely the outgoing working group chairs for the contribution to the work of the working group over the years, and also for their general active participation in AFI. I also take opportunity to welcome the new leadership within the working group, and it is my sincere hope that both the outgoing and the incoming will work together to ensure a smooth transition, and also to ensure that we continue with the building blocks to working group meetings. So let me again take this opportunity and also to acknowledge our external stakeholders, the Innovation for Poverty Action, and also the other speakers that will speak today. I notice Central Bank of Nigeria and other colleagues who will speak today for the effort that they are putting in to make this work. So I take opportunity again to congratulate the DFS and CEMCWG working group for another round of successful virtual working group meetings. The active engagements of your working groups, despite the challenges that we are all aware of brought by the pandemic, is a testament of the sustainability of our working group model as a network. Secondly, let me also congratulate the members of the joint subgroup that successfully codified a decade's work of these two working groups into a policy model on consumer protection for digital financial services. The unanimous endorsement by members during the annual general meeting does not only validate the quality of the work that you've put into this, but also underscores the relevance of the policy models to the wider network. Indeed, we will all agree that the policy model has come at an opportune time, at the time when growing incidence of consumer protection risk is threatening the sustainability of digital financial services in driving financial inclusion. This policy model, therefore, represents the much-awaited antidote to proactively address these threats. But what is the effectiveness of an antidote if it remains on the shelf, if it does not reach those who need it the most? Hence, the ultimate success of this policy model does not lay in the unanimous endorsement it received, but its adoption and implementation at your institutional levels. This will ensure that the core objectives of the policy model, which is to drive and guide the proactive approach to regulation and consumer protection for DFS, is achieved. This, in the long run, will mean safeguarding access, usage, and quality of DFS to the unbanked and underserved. These are the ones that need it the most, and that is really our core objective as AFI. You'll agree with me that the global pandemic and the ensuing emergencies that have seen the need for digital financial services becoming more relevant. We have all comprehended how digital payments, particularly when accompanied by digital financial infrastructure and enabling regulations, has helped governments quickly and securely make cash transfers and other social economic benefits in the form of financial support. At the same time, it is important to ensure that the end users of products and services offered through DFS must be safeguarded to fully reap the benefits of DFS. Hence, in this regard, I am excited that your working groups have considered it important to hold this webinar to deliberate on how best we can derive adoption of this policy model at institutional level. This is indeed the spirit of AFI, a member-driven approach to achieving financial inclusion for all. It does indeed validate our peer-to-peer approach to most of our offerings. Permit me also to reiterate that as we seek to promote the implementation or adoption of the policy model, the objective is not to seek to reinvent the wheel or to push for new regulation at your institution. For we are aware of the various interventions that you've undertaken, all are undertaken to address the concerns with consumer protection for DFS. Yet we acknowledge that the playing field is not equal. While some have made considerable strides, others are yet to successfully navigate the terrain. Therefore, this policy model is timely to provide not just a guidance for those yet or are still navigating the approach, but also to serve as a benchmark for existing policy interventions, especially during this time as AFI member countries are focusing on the recovery phase from the effects of the pandemic. So we see that elements of gender, youth, and forcibly displaced person should be considered in the policy implementation of this policy model to balance the approach towards digital innovation and also the risks that are involved. And on behalf of the Executive Director, I wish to assure you that the AFI Management Unit is ready to avail the services of the network at your disposal for the successful adoption of the policy model across the network. I encourage you to take advantage of these services, which will be discussed during your webinar. On this note, I wish to once again thank you for your participation, and we look forward to an engaging conversation. I wish you all an insightful and impactful webinar and good deliberations. Thank you very much.
Thank you very much, Mr. Mumba, for the opening remarks that has just been provided. Now, ladies and gentlemen, I would like to invite Mr. Stephen Ambore, who is going to theme set for us. And Stephen is the Assistant Director from the Central Bank of Nigeria and is also the subgroup chair on consumer protection for digital financial services. Over to you, Stephen. Thank you.
Thank you very much, Eliki. And good afternoon, good evening, good morning, everyone, depending on where you are once again. In my role as the head of digital financial services for the Central Bank of Nigeria, I decided one thing that has become very, very interesting for me. I decided that as a policymaker, I will take time periodically to engage physically people that will develop policy to impact, just to fill the pulse. In the next couple of minutes, I want to share a very interesting story based on my encounters when I went on one of such engagements. I met a lady called Iya Buki. Iya in Nigeria simply means mother, so they call mothers by the name of their children. So Iya Buki means Buki's mother, but that's what she was called where I met her. Now, who is Iya Buki? Iya Buki is a 51-year, obviously, woman with primary school certificate. She hardly can read or write. She sells petrol, gas, and gari. Gari is a type of a local food in Nigeria. She's a widow. She actually also lost both parents when she was very young. She's a mother of 5. Iya Buki has no bank accounts. All Iya Buki's hard work is to pay for the school fees of her children. She has no savings, but interestingly, Iya Buki has a smartphone, has a mobile phone, a feature phone actually, like 71% of the financially excluded people in Nigeria. Now, in order to encourage people to open a bank account in Nigeria, the tiered KYC policy was published. And it was a very great thing because for the very first time, people like Iya Buki that could not own a bank account because of the documentation requirement, all of a sudden were able to go into any bank branch and open a bank account. And this happened to Iya Buki. And she was very excited about that. And she deposited 3,500 Naira in a new account. That's equivalent to $11 US if you do the conversion as at that day. Trouble started when Iya Buki wanted to go to that same bank account and make a withdrawal. Now, the gentleman she met at the bank told her she needed an ID card. She did not know what much of a problem that was because she never had an ID card. She never had need for one. So she interacted with her friend who told her, you can get a national ID card, but it's going to take you 3 months. Here's Iya Buki that urgently needed to access her money. She felt 3 months was too far and she asked for another alternative. And she was informed that you can get a national driving license for 15,000 and you can get it the next week. So Iya Buki's money in the bank account, the entire money is 3,500, but she needed 15,000 Naira to access 3,500 Naira. While Iya Buki was thinking of what to do, and she's got an alert on her phone, there was a debit of 1,500 Naira on her account. And why was that? Because anyone that opens an account automatically is entitled to an ATM card. And the ATM card costs 1,500 Naira, which is charged to the account. Not too far away from that, Miss Iya Buki started receiving little debits on her account, and it was due to cybercrime. When it was too much for her, she thought of going to the bank, but she remembered that she did not have the ID and nobody was going to see to her. Iya Buki said, I leave them to God. God is going to judge them. Basically, Iya Buki has transferred consumer redress to Judgment Day. There are 5 very important things from Iyabuki's story. One is about the policy environments. Of course, the intention of tiered KYC is to bring as much people as possible into the financial inclusion bracket, but obviously there's a gap between policy intention and implementation. The second is looking at the product and the service. Is it inclusive enough? How do you expect someone to cough out 15,000 naira for a bank account that has 3,500 naira? How inclusive is that? Another issue that comes to mind is consumer awareness and redress, and the way the consumer is handled ab initio. If Iyabuki knew all what surrounds this bank account, was she really going to open that bank account? The next issue that comes closely is supervision and enforcement. Currently in Nigeria, there are over 15 DFS policies. How come none of them actually had Iyabuki in mind? Looking at the last issue, how is it possible that the bank manager can access Iyabuki's account and debit 1,500 naira? The cyber criminal can access Iyabuki's account. But unfortunately, Iyabuki, the owner of the account, is not able to access the accounts. Ladies and gentlemen, Iyabuki is one of the 1.5 billion people globally that do not have access to bank accounts or are financially excluded, and that their realistic hope of getting in the inclusion bracket is through digital financial services. Now, the great news is the consumer protection for digital financial services policy model is built with people like Iyabuki in mind. The policy is DFS focused against the traditional existing consumer protection policies using the brick and mortar environment that is quite generic. The policy model is human-centered, and it looks proactively at addressing negative human conditions. The policy can be applied at any stage of policy implementation. The policy can even serve as a plug-in to existing policy. Most importantly, like I mentioned earlier, it is built with Iyabuki in mind. Ladies and gentlemen, AFI, through a member-led approach, have done their parts. The other half depends on you and I. It is a call this afternoon for us to further understand this policy model, to make it known in our network and circle, to use it to address negative human conditions, and together we can make DFS work for people like Iyabuki. And it depends on you and it depends on me. Thank you very much.
Thank you very much, Stephen, for that very interesting theme setting that you've provided, which is very practical, very relevant, and also brings the whole discussion for tonight into a very interesting mode. And on that note, ladies and gentlemen, I welcome our moderator for this evening, Ms. Adedzwa Otto, who is the Policy Specialist e-Money at the Alliance for Financial Inclusion. Over to you, Adez. You're muted, Adez. Sorry, you're muted.
Thank you very much, Aliki. That was in a hurry to talk without checking on my microphone. So thank you very much, I would say my Oga at the top, for such an insightful theme setter. We couldn't have asked for anything more than that. He has situated our discussion today in the right context. If our policy model remains on the shelf, then we are denying people like Iyabuki the chance to actively use digital financial services safely. And like her, most of them will say, we'll leave it to God and we don't want anything to do with digital financial services. So how can we ensure that we move this policy model from the shelf, from our laptops, into our institutions, so that people like Iyabuki will have trust again in the digital financial services? To help us do this, we have an exciting panel of experienced members and also regulators and people who have been working in the policy field, with respect to digital financial services and consumer protection to walk us through this. So our panel is, we have a panel led by Stephen himself, whom you have heard from the Central Bank of Nigeria. And we also have Elizabeth Guerrero, who is the Chief Supervisor, Consumer Financial Protection from the Central Bank of Paraguay. Thank you so much, Elizabeth. And then all the way from North America is Rafael Mazde, who has spent most of his time collecting data, churning the numbers, and looking at how consumer protection is doing globally. So from the global perspective, Rafael is going to open our eyes to what we need to do. So, gentlemen and ladies, thank you very much for making time for this panel, and we look forward to an engaging session. Well, to kickstart, this is a policy model by us for us. But where are we going to implement it, and how are we going to implement it? So to kickstart our conversation, we want to run a very short poll to just test the temperature of what the current state of consumer protection for digital financial services regulation is like in our institution. So we have three options. Is the consumer protection for digital financial services landscape in your institution in a catch-up approach? Is it that you're there and when a problem comes, we develop a regulation or a regulatory directive to deal with that problem? Are you transitioning from catch-up to a more proactive model, as in you've taken the initiative to preempt and develop some regulatory directives ahead of risks coming up? Or have you already reached there? You've envisaged the possible risks that can happen in your jurisdiction and have gone ahead to develop policies to proactively deal with it. So in 1 minute, let us test the temperature. Let us test what the regulatory landscape is like across Nigeria. So whilst we do that, our panelists will get ready. Okay, do we have the results ready? Good. So what do we see? Interesting. And I think this was reflected in Norbert's presentation. Gaddafi is aware that most of our members, through a decade of work by CEMCWG and DFS working group, drumming in the message that we need to get proactive in addressing the issues of consumer protection for digital financial services. We're seeing 45% of our members here saying they are in the transition phase. That is exciting. And though we're seeing 30% saying we are in the catch-up phase, there's good news with 24% already taking the lead and ensuring that they would address risk issues head on. And that is the essence of our discussion today. How can the 30% learn from the 45 and the 24%? And how can the 45% go back and check and benchmark their policies to ensure that they are on the right track? That is what today's discussion is about. So let's kickstart our discussion today with Elizabeth and Stephen, who are both regulators. We want to know from you, what has been the experience of your institution in transitioning the consumer protection regulatory framework beyond the traditional cash and brick and mortar regime to the digital-led regime? Tell us what is working well and what can be improved. Elizabeth, you can start this conversation for us. What is working well? What can be improved from your experience of moving your consumer protection regulatory framework from brick and mortar to digital? Elizabeth? Hello, Elizabeth.
You are muted.
Hola.
Hello.
Hola, disculpe.
Hello. My apologies.
Go ahead, Elizabeth, we can hear you.
Buenos días. Buenos días, Eliki.
Good morning, Eliki. My apologies for my microphone. I was also very excited and I forgot to unmute myself.
Buenos días, Elizabeth. Please proceed.
I would like to share some of the Paraguay's experience. Can you hear me well?
Yes, we can.
Yes.
Disculpen. Bueno, más que
Okay.
nada.
I just want to share with you Paraguay's experience for the regulatory matters. We have a consumers protection law. And this is for using as a leverage, as you can see in this chart. This is the framework for the consumer protection, and this could be done for the different financial services. The authority is independent and is the one that is going to apply the law. However, regulator will assume some of the obligations for consumers in this type of services. You can see the difference with the authority. Due to its nature, not for a law perspective, and due to the nature of the function, this is what we're going to include in this role. That is why consumers need to contact the regulator because this is a regulator issue. That's why the central bank decided to start working not only in terms of regulation, but also to provide some service. And due to the culture of the country, before the pandemic situation, we were using digital means. And we managed to do it in a more easier way due to this digital format. We are trying to optimize this gap. We can see that the regulator and the consumer, and we are trying to sign an agreement so we can create some work and some results in a more coordinated way. We can join forces so the work that is going to be done together could be proper.
La parte de sensibilización es muy importante por el lado de los consumidores. Nosotros queremos trabajar mucho con ellos en forma preventiva. No tanto ha tenido una mala experiencia, por eso requiere reclamar. No obstante, tiene que haber un nivel para recibir esto, porque sí o sí, en algún lado de la cadena algo puede tener un quiebre, ¿verdad? Y es importante dar esa atención al consumidor. En cuanto al manejo de quejas, justamente les quería mostrar que los servicios financieros ocupan un segundo lugar en el volumen de reclamos que se realizan. O sea que y esto está bastante dado porque la supervisión aún no abarca a todos los prestadores de servicios financieros, lo cual también es un desafío que lo hemos visto y que está contemplado en ciertas modificaciones legales que se vinieron haciendo en los últimos años. Lo que más apuntamos es que la competencia que pueda haber una sana competencia, porque tener este tipo de distorsiones en las exigencias con prestadores de servicios similares suele generar bastante estos quiebres, ¿verdad? Y eso no estimula o no beneficia a la inclusión financiera. Muchos de estos reclamos se dan en entidades y como ya en eventos anteriores.
Like we have mentioned prior to this, there is an interconnection between the channels. I'm very sorry. What she's referring is that electronic help through the time has gone by in order to redress the problem of what are the real needs. And we have to adjust rules. And that has been our greatest reality and problem that we have faced and that we're trying to fix, whereby not remain with a fixed idea. We have to evolve. We have to really accept that we have to make changes that should be productive, that things have changed, not necessarily that we can go on as we are. We have to fix things. This year, we actually made a modification amendment to this law of electronic money and electronic services, digital services, in order to guarantee with incentives to the side of the offers and side of the demands and promote interoperability. What she mentioned earlier was the competitiveness between the service providers as well, so that it is successful. In Paraguay, 100% of the population has a mobile phone, and therefore this will create a very great interconnectivity between them. I just wanted to share with you this chart. This is a very difficult moment that we're facing, and one of our most critical moments today, and the possibility that payments can be made through electronic means. For example, subsidies, grants that the government is giving. And there we have set a very important advancement. Everything presented itself within a very positive framework. And it is very clear that these payments, because we're using these digital means, have arrived to their beneficiaries in a very proper way. Generally, it was a very positive experience for these transactions and operations. We didn't even believe before how to achieve this that we have achieved today in time and shape, and that we were able to do it. So clearly, it is a way forward. We have already started, and we're not going to go backwards anymore. We're just going to go forward, even if we have to face challenges, and we are evolving. And this is granting people a lifestyle, a livelihood, and it is extremely important during these times of this pandemic. So we see it as a need and not as an obstacle anymore.
Thank you very much, Elizabeth, for those insightful presentations. Now we hear from another regulator, Steven. You gave us that great story, insightful story about Iyabuki. But we also know that the Central Bank of Nigeria has been working so hard when it comes to the issue about consumer protection for digital financial services. So what was the blind spot? What did they miss that got people like Iyabuki in the crack? And what should other regulators like you learn from that blind spot that found Iyabuki back in the crack of financial exclusion? So what have you learned from the Iyabuki experience with regards to how to shape your consumer protection for digital financial services regulatory approach moving forward? Steven?
Sí. Bueno,
Now, Elizabeth, this was Steven. Thank you.
All right. Thank you very much, Ades.
Puedo compartir en otro momento.
Hello, everyone, once again. I know everyone likes stories with happy ending. So just to let you know, Iyabuki's problem was eventually resolved based on the fact that we met her. But of course, it's not the ideal way to resolve such issues. So what are the blind spots? It is really, really hard to accept that most of the policies that we develop are hardly human-centered. Do not get me wrong. We tick the boxes. We have policymakers that assume the role of users. They feel because we've used certain financial services, we're experienced in developing policies, we know what the issues are. Not forgetting that there are, in Nigeria, for instance, 36.6 million people, all of them with different stories that need to get into the financial inclusion bracket. 36.6 million people, that's bigger than the population of the entire Ghana. You know, to just assume that based on prior experience is enough to develop policy, it's a huge, huge mistake. Don't get me wrong. There was exposure draft to these policies. Guess what? Who are the people that respond to exposure draft on internet? Certainly not the type of Iyabuki. Iyabuki does not read or write. So the first thing that came to fore here, the need for a user-centered or human-centered policy development, not with any assumption that we know what the issues are or we know what the problems are. The more we go out there, the more we seek to understand, you know. So as far as digital financial services, and indeed any policy is concerned, specifically as it has to do with consumer redress, it is very important to look at the human factor. We've not done all wrong. You're talking about implementation experience. There are certain things that we've done that are quite proactive. One of such is, even before we started going deep into digital financial services, we have looked at the risk landscape and we have mandated as regulators every financial service provider to have a fraud desk specifically to respond to issues that have got to do with digital financial services related fraud. We provided a platform that will facilitate consumers that are not satisfied with the service or the redress that their financial service providers are giving them to come to us, you know, as an organization. And over the years, it has really been helpful. But unfortunately, we are playing catch up in a lot of areas. I've mentioned the context of policy development. Another area that we're really playing catch up is the nature, the evolving nature of DFS and its risk. We find ourselves almost jogging and panting all the time to catch up. Now, I don't believe in developing DFS policies. There's a place that you reach and you don't need to do anything. But of course, we can be much more proactive. So we're playing catch up in that area. We're playing catch up in pricing. because this is a new business model, different from brick and mortar. The service providers are thinking of profitability. And when you think of people at the base of the pyramid, you're talking of affordability. And we, the regulators and financial inclusion people, are the middle. On one hand, we're thinking of financial system stability. In the other hand, you're thinking of the people at the base of the pyramid. At the other hand, you're saying these people that are into business need to be profitable. Another angle from this is looking at it from the ecosystem perspective. Now, as financial service ecosystem in Nigeria, there's been a lot of collaboration that has been helpful. We have a lot of structures on ground, one of which is the financial inclusion committees. And indeed, we have MOUs between organizations that will help us look at these things together. But on the other side, there's a new challenge with DFS, because regulators across different entities are coming to provide regulation. So that overlap is really causing some huge challenges. So we've not done badly. On one side, we've put our hands up. We have accepted that these things are new, and we're learning, and we keep investing in learning. Secondly, we have accepted that disparate solutions will not work for this. We're working as an entire ecosystem to address this particular challenge. Now, synergy cannot be overemphasized. So basically, yes, there are blind spots that we've seen, and we can do better. There are certain things we are doing better, but there are challenges that we're seeing. So our experience has been very mixed, and every day we look forward to learning. So even in this little workshop here, we hope to gain more to add to what we're doing. Thank you.
Very much, Stephen, for that presentation. So now let's go and have a look from the global perspective. Rafi, you heard Stephen's story about Iyabuki, and you heard him talk about all the good things they are doing, how hard they're working, but yet still they're blind spots. Like most of our members here too, are putting in so much intervention into addressing the issue about consumer protection for digital financial services, but yet still they are cracked. There are blind spots. You come from a global perspective. You have the big eyesight all over the globe. Tell us, what are the trends you are seeing? A lot of regulators experiencing what we're seeing from the Central Bank of Nigeria, working so hard, but yet some small blind spots are opening up the cracks. And how can regulators address? What is the trend globally? What are you seeing from your tank of data? Rafi?
Thank you very much. And thank you all for letting me join this really rich discussion. And so, as you mentioned, I'm going to come at this from a data angle, because I believe with digital finance, there's both challenges, but also opportunities if we let the data do the work for us in terms of consumer protection supervision. So just as a background, I'm the project director of consumer protection for IPA, Innovations for Poverty Action. We're a global leader in impact evaluations. So we work with regulators such as yourselves to not just develop policy solutions or interventions like financial capability programs or improved pricing information, but to actually measure, does that work? Does that improve consumer understanding? Does it improve likelihood of consumer shops around? Because a policy without an impact evaluation is just a big question mark. And so that's where we work with yourselves. And one of the starting points is data. Next slide, please. So this is a map. I'm sure many of you have seen maps like this of the hot fintech ventures 2018 in Africa. And this is a messy map, and that's the point. We have a wide range of new digital finance service providers that, as Stephen mentioned, are a mix of regulated and unregulated. They may cross jurisdictions, may have some payments functions, may have crowdfunding aspects that link to securities markets. It's a mess and it's growing exponentially. And so it can be a bit overwhelming to monitor these markets. And so what I want to do is share a bit now and a bit later some of these strategies we're employing to better track consumer protection issues and make sense of these fast-growing markets without overburdening your teams. And I'll give you one example now, which is more on kind of the monitoring market development and market behavior. And then later on, I'll talk more about capturing that voice of the consumer experiences that Stephen mentioned, which is so important. Next slide, please. So as I mentioned, I'll walk through now the transaction and account data analysis, and then I will focus in the second section on how we're using tools like social media monitoring or complaints data mining to better track consumer protection and market conduct in digital finance with regulators such as yourselves. Next slide. So in the first area, transaction and account data analysis. What I mean by this is going beyond aggregated reporting that we may receive from providers to look at account level and transaction level details of all the ins and outs of a deposit account or loan product, for example. And this was something that was probably not really possible in traditional financial services. But the wonderful thing with channels like mobile payments or SIM registration data is we now have this incredible granular set of detail that we can pull on just how these products are being used and where risk factors may lie. So this is an example of a project I worked on with the Bank of Tanzania in 2018, where we were looking at the digital credit market in Tanzania, one of the faster growing ones in the world at that time. And it was a mix of regulated and unregulated providers. But the one commonality all providers had is they all both dispersed and received loans through mobile money channels, right? It is the payments rails that makes these tiny loans economically feasible for these providers. And so we were able to audit all the mobile money transactions linked to these digital lenders' accounts. So it could be both unregulated and regulated because Bank of Tanzania oversees the payments channel. So even if they don't formally regulate the lender, they do formally regulate the channel with all the transaction data. And we're able to gain a lot of insights both on the volumes of loans, repayment, and also some demographic segmentation. And I encourage you to look through the slide deck and the link below, but I'll give you one teaser of the kind of ways we can parse out consumer risks. Next slide, please. So in Tanzania, we took the payments data showing all the transactions for these loans, and we merged it with the account registration detail from the SIM of that mobile money account. And we're able to do things like look at date of birth and find that you have a really noticeable default rate or unpaid over 90 days amongst 18 to 24-year-old borrowers, just much larger than all the other age demographics, which they fall within 12 to 17%. And 18 to 24-year-olds, almost 27% of all loans taken are not paid back within 90 days. So that tells you a common story we've heard in other markets of the risk factors of pushing consumer credit to young populations. And so it raised questions of how are you marketing? Are you promoting at universities? And maybe if so, perhaps we should stop that because that's not a good situation to indebt consumers. Then we can also look at location. So we use the cell tower data and we saw, so the darker blue on this second graphic on location is a higher percentage of overall loans not paid back at 90 days. And you see the Western lower income parts of Tanzania are where you have higher default rates. So perhaps we shouldn't be pushing, 7 to 30 day nano credit to low income farmers who probably could benefit more from like an agricultural input loan or something towards that productivity. For a day-to-day trader in a market in Dar es Salaam, yes, maybe that makes sense. But For a farmer, they probably need a 6 to 12 month product. Then another thing we were able to do, the last graphic, is the time of day analysis. So we looked at what hour was the loan originated. And you can see that these are the number of loans unpaid after 90 days by hour of day, by day of the week. And it starts with midnight and goes through the day. And you can see huge spikes at 12 a.m., 1 a.m., 2 a.m. That is probably someone that is not borrowing for a productive use, I would say. But then we see, around 5 a.m., 6 a.m., 7 a.m., there's a much lower default rate. And that's where these products are suitable, because those are likely market traders, as I mentioned, or taxi drivers who need a little bit of capital for their daily expense to then be productive. They need to be able to buy the vegetables to sell the vegetables. They need a little bit of petrol to start their day as a taxi driver. So this is where you can take this type of data and segment out how a product, not just saying digital credit is good or bad, but saying digital credit is working for these consumers, it's not working for these consumers, and then formulate more nuanced policies and interventions. Next slide, please. So we are diving deep on this. Tanzania is the one public example I have right now, but for example, we're working with the Competition Authority of Kenya on a digital credit market inquiry, where we're using transaction data to size out the market, look at default rates and other debt stress indicators, look at things like multiple borrowing and switching. Do we see evidence of competition where someone with one mobile phone number, because it's a common tag across many providers, is borrowing from multiple providers, or are we seeing market concentration, which is another issue I worry about in digital credit, is sort of market concentration because of dominance in telecommunications and mobile payments. We're also looking at mobile money transactions, not just digital credit, to see how they change over time, looking at what are the prices paid. We've done some segmentation around gender, where we've seen in certain countries, women tend to pay higher average fees on their accounts per volume transacted. So they seem to not be taking advantage of promotions or other or price optimizing in other ways. And this is one thing I put as potential that I would love to do with any regulator where there's been a 0 rating or a reduction in fees on mobile money payments during COVID-19, is we would love to do a pre and post analysis to see how consumers responded. And then once the fees are normalized, do they continue to use DFS? Because we can do some really interesting price sensitivity analysis for yourselves. Then finally, on deposit products, we've been auditing the fees and charges through transaction level data and seeing some really concerning practices. I think we all know sometimes that there's a high cost to saving for low income, for low balance savers. And I've seen things like significant use of account closing fees. And you should not have to pay to walk away. So that's an example where using transaction data, we can see 10% of accounts paid an account closing fee, or we see 50% are paying minimum balance fees. And you go, okay, that's not working for that consumer segment. That's not well designed to their use. Providers, how can you develop savings products that work better for small balance savers? So we really believe strongly in this transaction level approach. And we have a whole team of data scientists that are working on this with regulators. So we're excited to hopefully see this as a method that others can adopt to better monitor digital financial services. Thank you.
Great. Rafi, before you leave, in a minute, I want you to, we've talked about the fact that even though regulators are doing a lot, there's still much to be done. So quickly, some of the key considerations, policy considerations, or issues regulators to prioritize in implementing consumer protection intervention.
I lost you. Can you still hear me?
I'm not able to hear others. Can others hear?
Okay. Can you hear me, Eliki?
She's kind of frozen.
Okay. Can you hear me?
Yes, I can hear you loud and clear.
Okay. I got most of the
we
question.
can hear you.
So I think it was around the priorities. I would say there's two priorities. The first is kind of a bigger picture, which is to resolve these regulatory coverage and mandate issues. So either we should develop standalone market conduct authorities, expand the coverage of the central bank over non-bank actors, or you can look at combining jurisdictions or doing kind of pass-through supervision like I was sharing with Bank of Tanzania using the mobile payments data. So I think we need to resolve that because there's still in many markets, especially I think in Africa, a lot of regulatory arbitrage that happens, unfortunately, with DFS. Then the second thing is I think, consider hiring, more data scientists. I really do believe that if you're going, so the providers are using complex, statistical software, they're developing complex algorithms. You need someone on your side who can talk the talk with them. And so those would be my two priorities, I think, to implement your policy regimes around DFS consumer protection. Thanks.
Great. Thank you very much, Rafi. So now let's go back to the regulators. Rafi has given us his top two priorities. We want to know from you, do this reflect in your medium to long-term priorities for your institution? If not, what are these priorities you have for your institution? Because our members are also listening as they work towards identifying priorities to shape their regulatory approach to consumer protection for DFS. We want to understand from you what informed these priorities and what will be your considerations in the implementation of this priority. So Elizabeth, can you please start for us here? Elizabeth? Hello, Elizabeth.
I
can hear you.
I don't think Elizabeth.
I can hear you.
Yeah, I don't think Elizabeth is on the call.
Okay.
She must have dropped
Stephen,
off.
can you come in for us, please?
Sure. Let me just chime in now. Yes. So I got a question about priority, medium term and long term priority. And interestingly, I thought about this, and both the medium and the long term priority for us is the same, is the consumer and the consumer. And why is that so? When you look at the data, for instance, for electronic fraud, there was a report that was published in 2019, and a lot of people were celebrating. But for someone that is into DFS and financial inclusion, it was a bit of a concern for me. And what did the data say? The data showed that electronic fraud has reduced by value, but has increased by volume. That tells me something. That tells me that electronic fraud is leaving the enterprise more into the hand of the consumer. And putting electronic fraud in context of fraud generally, out of the entire financial services fraud committed in Nigeria, 89% of them are from electronic platforms. Now, the focus of digital financial services and indeed the financial inclusion strategy is on digital financial services. And through that, we've rolled out initiative that will see, if you like, an explosion of financial service access point through agents. Already, there are issues around trust, except as we're rolling out, we're putting the consumer in our consideration, in our design and implementation in such a way that it will not have unintended consequence, but instead it will promote a DFS. Consumer has to be from the beginning of what we're doing. Another thing, just like Riv mentioned, is the issue of data for this particular consumer. We have seen that we cannot do much except our policy that has to do with DFS for consumer protection is basically data driven. That is where we're going to get insight that will help us. I will tell you, for example, one major area of focus we have in Nigeria is women. We want to close the financial inclusion gap, but guess what? There is currently no gender segregated data. So how can we achieve what we want to achieve apart from that? So basically, when you look at the consumer buckets and start addressing these issues one after the other, basically to engage us in immediate term and long term. There are some other considerations, but I'll just leave this now so that other panelists can chime in.
Great, Stephen. Thank you very much for that. Stephen, can you also share with us what have been some of the challenges you have come across in trying to implement or address these considerations you have talked about, or some of the challenges you envisage? Because you might never know, somebody else listening to you might be facing the same challenges. So what are some of these challenges, or what challenges do you think you're going to have in implementing these considerations you've mentioned? And if Elizabeth, you're around after Stephen, please do chime.
Yes. Okay. Thank you very much. Again, Ades. You know, when I was talking about consumer, I had behind my mind that there are different angles that are involved. There's a demand side, there's a supply side, and the regulatory side. So focusing on consumer basically is the anchor for me for these three major entities. In terms of challenges, one huge challenge is how to handle overlapping regulation. And just with one instance, CEMCWG, for instance, the telco has a particular responsibility to telco customers. The financial service provider and regulator has a particular responsibility to their customers. But who exactly owns the customer? And how can you manage it in such a way that you're dealing with one person? So because of this gap, this overlap, this regulatory overlap is really affecting the kind of focus we want to give on customer. Another thing is ID. You cannot successfully talk about major achievement in digital financial services without functional identification. Out of 96.6 million people in Nigeria, just about 41 million of them have any form of ID. We're looking at fintechs, we're looking at other ways, but except we get a headway on addressing this ID, it's really going to be a challenge. Another issue is the capacity of the regulator. This is an evolving space. We keep learning, and that is why we've reached out to people like REF and IPA, and they've been helping out a lot, and we've been trying to learn ourselves, you know, and we'll try to collaborate with other stakeholders. So in terms of challenge, in summary, regulatory overlap is a huge concern for us. Lack of functional ID for most of our consumers or people that want to include in the inclusion brackets is a concern, and the capacity of regulators to handle this evolving problem as well is another concern. Thank you.
Thank you very much, Stephen. Is Elizabeth, are you around, please? Elizabeth, are you back? Do we have you back online? Okay, we don't have Elizabeth, so we'll continue the conversation whilst we try to get her back online. So to continue the conversation, we will go to look at how do we integrate vulnerable populations into our work on consumer protection for digital financial services, or into when we start reforming our consumer protection for digital financial services way. How do we integrate vulnerable populations into it? So Rafi, can you start that for us?
Sure. So again, since I'm a researcher, I'll use some research examples. So maybe if we move to the next slide. And so when I think of vulnerability, I think of impact, of outcomes, negative outcomes, right? So someone is theoretically vulnerable, but what I care about is, are they truly vulnerable? Do they truly suffer from instances of abuse? And so I want to share some work we're doing to help improve complaints, supervision, and monitoring in the markets. I think these are the Paraguay slides. Let's skip to my slides. Perfect. So I want to share a project we just completed where we started using social media data to monitor consumer protection issues. And we did this in Nigeria, Kenya, and Uganda. And the idea is, while social media is not a perfectly representative sample, it does give us a relatively low cost and easy window into some common issues that may be affecting both those who are on social media and other consumers who we don't hear from as easily. So what we did was we developed a machine learning tool that takes millions of social media posts and can take these random tweets and Facebook posts and structure them into consumer protection insights. Can you click forward? So this is just an example. So for example, in Kenya and the other markets, we wanted to look at fees and charges. So we entered in 5 keywords and had the machine look for those keywords across tweets and Facebook posts. Please advance one. And so you'll see this is an example where it finds refund as the word in dark blue underlined in this tweet. Please return my funds in my account at a balance, and today it's negative. So someone clearly, this is a common issue in Kenya. Bank staff tend to, there have been some significant cases of internal fraud where money goes missing in people's accounts. It can be fraud, it can be hidden fees. Please refund my money. But what's great about this, this algorithm is it sees refund, a word we told it, but it also looks at other words that are relevant to the context and advance. And then it starts to pick up tweets that are relevant that don't even have the first keywords we had. So it builds a dictionary over time that includes, and we use Sheng and Kiswahili as well, and we use local languages in Nigeria and Uganda as well. So this is really wonderful. You can just give a few keywords and the machine builds up a lexicon that you can then use. Next slide, please. And so I think this is an incredible tool to track abuse and vulnerable populations in real time. And so I want to show one of the things we saw in this analysis. We're looking at a year's worth of data from July 2019 to June 2020. And this happened to correlate with the COVID-19 pandemic. And so we saw increases in content related to consumer protection COVID-19. Advance one. So you can see across the 3 markets in Twitter, in Nigeria, you don't have as much of a Twitter spike around the pandemic, the dotted line, March 11th. But in Kenya and Uganda, you see a significant rise in issues. So it tells you there were some consumer concerns that were being raised in Kenya and Uganda at this time. And then advance one. And then in all of the markets, you see Facebook is showing a huge spike of issues raised. And demographically, Facebook serves more of a mass market than Twitter. Twitter's a little bit more biased to urban, young, and better off. So this is even more useful to look at. Advance one. And then the Google Play Store, we also looked at Google Play Store. We were just looking at positive and negative reviews of fintech apps. And we didn't really see a ton happening around the pandemic. So that tells us that that's not, that we weren't seeing any changes in kind of the positive and negative reviews of products, but we were seeing operational issues being raised through Twitter and Facebook. Advance. And then you can disaggregate this even more. We talk about, how do we measure gender effects? So we looked at the change in Twitter content, pre and post COVID. And you can see in the case of Nigeria, actually the circle's not on the right section. If you look at the pink heading, that's related to fraud issues in Nigeria. Sorry, pink is coded for fraud. And we saw that there was a huge spike of women complaining about fraud on Twitter in Nigeria post-COVID. And we also saw in Uganda customer care issues, which is the yellow one. I'm sorry, these circles didn't get aligned. You saw a huge spike in customer care complaints on social media, both for men and women, a bit more for women. And what's interesting in Uganda, as I'll share in the next section, we've audited formal M&O complaints data in Uganda with the regulator, and we actually see a huge decrease in customer care logs post-COVID-19 pandemic. And we believe that's because they were short-staffed. And so what you see is customer care wasn't working, so people moved to Twitter. So even when customer care breaks down, social media and other third-party voices can let you still monitor what's going on. All right, next slide. And so as I mentioned, this is coming in November, and we're going to have a webinar on this. There's the link on the previous page shows the social media report. You can check it out, and I'm happy to share more details on it. There's a lot to unpack in it. But one other thing we're doing, not just looking at social media, we're looking at actual complaints data. So we reviewed 18 months of customer care logs with the Uganda Communications Commission for MNOs, mobile network operators. And this is several million customer care logs. And we added in demographic data. So the original reporting template didn't have age, gender, and location of SIM registration. We added that in. So now we're comparing differences of how often women or men or young people or people in the capital versus up country use formal complaints channels. What are the different types of issues they complain about? We've developed really robust and detailed metrics on turnaround times and rates of resolution. And we've also been able to do some time series analysis to see spikes and hotspots of issues. Like we saw increase in fraud complaints in the customer care logs post-COVID-19. And we're going to layer over this a consumer survey to get a bit more details on not just the numbers of who complains and what's the outcome, but what has the experience been like. So this is really, I think this is the future of DFS supervision. And we're ready to roll with this. Next slide, please. We have a 4-year program funded by the Bill and Melinda Gates Foundation that is explicitly designed to work on these consumer protection DFS challenges. And so we're prioritizing fraud, complaints handling, and consumer choice and pricing. And we're building these market monitoring tools. And we just got clearance to expand this market monitoring phase. So if there are jurisdictions that are interested to try transaction level analysis to measure pricing or responsible lending, to use social media scraping, to analyze complaints databases, the door is open, and here's my email, and we would love to learn more. So thank you very much for the time, and I look forward to continuing the conversation.
Great. Thank you very much, Rafi. And Stephen, conclude this conversation with us by giving us insights to consumer protection for digital financial services intervention that could be transformative in bridging the gap for vulnerable segments and vulnerable periods. Nigeria has the opportunity to experience both vulnerable segments and vulnerable periods. Share your lessons with that. What do you consider as transformative intervention when it comes to these vulnerable segments and vulnerable periods, such as COVID, conflict, unrest? What are some of the interventions that have worked for you? And what can other members learn from it and incorporate in their reform of their regulatory framework on consumer protection for digital financial services? Stephen?
Thank you very much, Ades, and thank you very much, Ray, for the excellent data and very, very insightful. And Ades, just looking at our context, first of all, when we talk about vulnerable in Nigeria, we look at it from the viewpoint of our financial inclusion strategy. So the vulnerable groups we've identified are women, youth, MSMEs, and the rural dwellers. The particular, of course, they are IDPs, but specifically for financial inclusion, we are focusing on that. But what we've decided to do as a starter to address the vulnerable group is to focus on women. As many as follow the Central Bank of Nigeria, you know that very recently we launched a framework for advancing financial inclusion for women in Nigeria. Now, as part of the framework, we had 8 strategic imperatives. And the good news is 4 of those 8 strategic imperatives are directly from this work of consumer protection for digital financial services. So basically for women, we're looking at digital financial services and literacy. Why is this? Because research has shown us that the 3 key levers that increasingly keep women financially excluded in Nigeria are trust, education, and income. So we believe financial and digital literacy would drive, to certain extents, will provide capabilities and skills that will drive this and improve income. We believe digital financial services delivery channel needs to be closer to women because of the nature of their day's business and the fact that they are where we are, they are basically responsible most of the times for the household. They need to be closer home. So they need financial services closer to them. Another area that we're looking to address as a strategic imperative, like I mentioned earlier, is gender disaggregated data collection. Because just like Rav mentioned, the place of data in addressing these challenges is very, very huge and important. And the other thing that we're looking at is product and delivery systems for this category of people. And transformatively, how are we going to do that? Basically, we're looking at an ecosystem approach to addressing it, because unlike other initiatives that we've done before, we've seen that if a regulator pursues this by themselves, with the best of our intention, we might not achieve what we set out to achieve. So from the very beginning, we're looking at interoperability. When I said interoperability, I mean real collaboration, exchange of data, exchange of regulatory concepts between regulators and policymakers, within regulators and policymakers. We believe this is what is going to push this needle as far as we desire it to go. Now, this is looking at the vulnerable segment. What of the vulnerable situation? Indeed, 2020 is a very interesting year. As some of you might be aware, in Nigeria, after COVID, there's a lot of civil unrest because of certain things that are happening. So twice in 1 year, people have basically migrated en masse towards digital financial services. Unfortunately, the impact during COVID was not too good because 80% of the agents that the populace would depend on for their financial service access points were impacted by COVID, and it actually impacted the service that they are meant to deliver. So increasingly, what we're looking for transformatively to look at the environments during distress in terms of digital financial services is resilience. Resilience for the financial service provider, resilience for the structure and framework for consumer redress and consumer complaint handling. So basically, I'm saying we're focusing on women, where we've already identified key strategic imperative we're looking to address, but not just an institution, we're looking at it from an ecosystem perspective. Secondly, for the environment, the need for a resilient DFS in terms of service delivery, in terms of consumer redress has come to the fore, and we're looking to address that as a way of making digital financial services more usable and to attract more financially excluded people to the bracket. Thank you.
Thank you very much, Stephen, for those insightful remarks. We have Elizabeth back. Thank you so much, Elizabeth. We missed you. So can you conclude for us with what has been the experience in Paraguay with for integrating vulnerable populations into your reforms on your consumer protection and digital financial services regulatory landscape? What has been the experience? What has been the experience from Paraguay?
Hola, Ades.
Hello,
Ades.
Ades.
Hola, ¿me escuchas?
Can you?
Yeah, please talk. I can hear you. Yeah.
Ades,
What has been the
discúlpame,
experience
¿me
from
puedes
Paraguay?
repetir la pregunta?
Can you repeat the question, please?
The question is that what has been the experience from Paraguay on integrating vulnerable populations into your work on consumer protection for digital financial services? What kind of vulnerable populations do you focus on in Paraguay? For example, women, refugees. Who are the vulnerable populations in Paraguay? What has been your experience?
Sí, justamente los últimos abordajes están
The recent approaches have been towards getting the potential to the segment that is quite conservative in our country, and that is microinsurance. During this pandemic situation and in other type of situations of emergency, they help us to reduce those gaps and the different vulnerabilities among people according to the economic activities. So we are talking about these micro social services, trying to modify different regulatory aspects that would help us to boost those services so these could be brought through digital media. We believe that with these actions, many families and producers could be benefit from, especially those in the basis of the pyramid that in other times with emergency situations could provide a good backup of the products.
Thank you very much, Elizabeth, for those insights. So thank you very much, panel. Elizabeth, thank you. Thank you.
Sí.
Yeah, thank you.
Estoy. Gracias, Ades.
Thank you, Adis.
Thank you. All right, so we've come to the end of our panel discussion, but not the end of our conversation. We want to go ahead and look at, we've heard from the panel, how do we move on beyond what we've heard from the panel on blind spots, on how to integrate vulnerable populations, on what considerations we need to have in mind. Now we want to roll up our sleeves and get to work. How do we go ahead and implement this policy model? Pardon my dog. Yeah, my apologies. So we want to look at how we want to hear from you. How do we implement this policy model? It's an open discussion now. Questions and answers, but let's keep it more of an open discussion. How do we implement this policy model? Who is going to set the ball in for us? Anyone, or you can type it in the chat section and I'll read it out for you. You can type it in the chat section and I'll be happy to read it out for you. Or Eliki will help me here to read it out for you since my dog is craving for attention. So you could, we want to hear from you. How can we as a working group implement this policy model? Instead of having questions and answers, we want to hear directly from you. How can you, as a member of CEMCWG, how can you, as a member of DFS, what can the working group do to help us implement the policy model in our institution? Or you can also talk to us. So who is going first for us? We are not getting anything in the chat. Who will start for us? Hello?
We can hear you, Ades. I think also for the participants, you can also raise your hand and we'll have your mics unmuted if you want to contribute to the discussion on the question which Ades had just raised. Thank you. All right, so we have Damola who has raised his hand. Can I please ask the administrators to allow Damola to speak? Susanna Adiemi, thank you. Okay, Damola, your mic is activated. You can unmute yourself and proceed with your intervention. Thank you.
Okay, can you hear me?
Loud and clear.
Okay, good day everyone, and thank you very much to the panelists for the session. My question is actually addressed to Rafe. I just wanted to confirm, you spoke a lot about getting data with respect to social media and tracking some of the activities and the behaviors that is going on there. To your mind, is there any channel or any other platform that can be leveraged on to get an insight into the behavior of some of the consumers? Yes, I know that the social media is a channel that everybody's getting onto, but you would also agree with me that for a lot of the developing countries, social media is still not as widespread. So to your mind, what else can be done, or what else can we use to track behavior? Thank you very much.
Okay, so I'll get to any of our two regulators to give us insights for that. Unfortunately, Rafi had to attend to some other equally important assignment. So I'll get either Stephen or Elizabeth to come in here. Thank you. Or anyone from RPMU to come in here.
Hola, sí, yo lo puedo contestar.
Yes, I can reply. The only thing I would like to mention is sound problem. Yes, they were asking regarding the regulations aspect. Hello, can you hear me?
Yes, Elizabeth, please continue for us. Thank you.
Yes, I can hear you.
Ades. I was not listening. If you can repeat the question.
How regulators can also incorporate social media in their monitoring and supervision. Damola, am I right? It's around the use of social media by regulators in their monitoring and supervision of the financial market. Maybe you could share with us from your perspective in Paraguay, how you've been using social media in monitoring the market.
I think her sound is gone.
Hello, Elizabeth. Hello?
Ades, we can hear you.
Yes, Elizabeth wanted to answer the question, so I thought we could give her opportunity to share experience from Paraguay in the use of social media to address consumer protection. All right, it looks like we have a challenge with Elizabeth. So we'll go to the next slide for us to present to you what AFI, the services AFI has available to help you implement this model. And we really encourage you to make use of the services as Norbert shared in his opening remarks. So can we have the next slide, please? Can we have the next slide on AFI services, please? Okay, good. So from our side, AFI is looking at supporting our members to implement this policy model. And there are 3 ways in which AFI will seek to support members to implement this policy model. And the first approach will be through in-country implementation. Here we are looking at helping you in the development of relevant regulatory policies around consumer protection for digital financial services. I will invite Eliki to speak more to this.
All right, thank you very much, Ades. So I think for the information of the members based on what we can provide as support for implementation, there are 3 big buckets that currently are services that we can offer from the AFI management unit. First is on the in-country implementation. So many of you are already aware of the facility that we have in providing in-country implementation. So this ranges from development of regulatory policies to design and implementation of the consumer protection for DFS relevant initiatives, whether it be a survey looking at demand side surveys or market risk assessment. The second area of support that AFI also can provide is on capacity building, building on members' capacity in terms of understanding more or deep diving into the policy model and how we can bring this down at the jurisdictional level, undertaking joint learning programs amongst member institutions that have already or are leading in this policy area, and also support through our PPD platform, focusing specifically on the topics that have been highlighted under the policy model for consumer protection for digital financial services. And then lastly is on peer learning, which many of us continue to do within the working groups, within the regional initiatives, amongst selected member institutions, where we build on study tour. For now, we see that there's a large increase and uptake on virtual tours, which is being undertaken between members, which is something we can also leverage on focusing on the implementation for this specific policy area. In addition, the virtual bilateral technical learning with members who are, like I mentioned earlier, leading in this specific area. And finally, on the peer review of draft documents specific to consumer protection for DFS, where you would need intervention or support with in terms of implementation. So these are the four big buckets, 3 big buckets, my apologies, on what AFI management unit can provide support with to you, looking at the implementation of the policy model at your jurisdictional level. So on that note, I think it brings us to the end of our webinar series for today.
Eliki, we'll take a quick poll. Thank you, Eliki.
So I leave it back
We'll
to you,
take a, yes, thank you very much, Eliki. We'll now take a quick poll from the presentation Eliki has done. We want to hear from you what kind of support you will require from AFI to help us also plan to support you. So from the presentation Eliki has given, what kind of support would you need from AFI to reform your current policy framework on consumer protection for digital financial? Thank you. Okay, can we see the results if we have them ready? How would you want AFI to support you moving forward? Do you want some help through in-country implementation? Impressive. So we have 83% of us saying we want more capacity building intervention, and we have 45% saying we want in-country implementation. Then we have peer reviews and peer links. Thank you very much for your input. So moving forward, if you want in-country implementation, please reach out, send an email to Giaz or send an email to Eliki on the kind of in-country implementation you want, whether it has to do with helping you develop a regulatory directive or undertake some intervention in country. Kindly reach out to Giaz and Eliki in this regard. Also, with respect to peer review of policy frameworks and peer learning, you are developing a policy framework and you want members to contribute, please reach out to Eliki and Giaz in that regard too, and we will attend to you. We'll be reaching out to you with possible themes for capacity development and training, and we look forward to a year of active engagement in capacity building on consumer protection for digital financial services. As Norbert said, this is our policy framework. We developed a policy model, we developed it because we wanted it. We developed it because it's very important for us. So let's move it from the shelf into our institution, because that is the only way we can prevent people like Iya Uki from falling into the crack. Thank you very much, ladies and gentlemen, for making time to participate in this webinar, and we look forward to an active year engaging with you on reforming your policy framework on consumer protection in country. Thank you very much.
Thank you so much. Thank you, Ades. I think this was a very exciting webinar that has now come to a close. Again, thank you so much for your participation and for your engagement. Thank you to our speakers. Thank you to our translators, and thank you to the team that has been behind the scene. And on that note, a very good day from Kuala Lumpur to all of you. It's our evening here, and we look forward to meeting everyone very, very soon. So thank you so much, and we wish you a pleasant day. Thank you.